Hello, everybody. My name is Ty Bernicke, and today I'm going to be talking to you about what to know when hiring or firing a financial advisor. When you think about what a financial advisor does, there's really two common ways that they can add value to your financial situation. One is to help you manage your investments more intelligently, hopefully. And the second way is to make sure that you minimize unnecessary taxes. And there's many other ways that advisors can help you manage your money more effectively. But I would say these are two of the more common ones that people will go to a financial advisor for. And when you think about, well, how much value could a financial advisor add? There's a lot of discussion and debates on this, but there is one study that Vanguard did on this topic, and they wrote an article on it called Quantifying Vanguard Advisors Alpha, and it was written in June of 2020. And basically what they found and what their research showed is that a financial advisor can add about 2.1% in value on the amount of assets that they're helping you manage. So if somebody had $1 million invested, if they can add an extra 2.1% per year, that's some real money that we're talking about. And that's what they quantified as far as helping with investment strategy, which would include things like how to allocate your assets and how to minimize unnecessary expenses outside of what the financial advisor is charging, and how do you rebalance the portfolio, and how do you make sure you stay with the investment plan when times are really good and really not good. So that's what they came up with, is 2.1%. And as far as the tax strategy, including tax loans, asset location, and withdrawal order for client spending in retirement, what they found is that a financial advisor can add up to 1.85% in value in their study. And that's on an annual basis based on the amount of investments somebody has invested. So 1.85% on a $1 million portfolio would be $18,500 of extra value per year. And if that's compounded, that can add up to real money over time. Now, the most important thing that I'd like to convey to you about this is, in my opinion, many investors are not getting anywhere close to this much in value, especially on the tax planning side of things. And I'm going to do my best to explain why in a very short amount of time. So if you look at all of our certified financial planners that work at our office and look at all the different tax minimization strategies that we employ, I would say close to 95% of the strategies that we employ, or more than that, there is a lot of information that we have to gather to be able to execute and implement and even discover the tax minimization strategies. So we call the information that we gather, and we call it the gap, because we find that when many people come into our office, nobody's gathering this information, and therefore they can't recommend the tax minimization strategies in the first place. This would include things like, what are your current income sources? What would you expect your future income to be if you retire? What are you going to need in the future for retirement? When's your retirement date? What is your net worth? What types of assets do you have that make up that net worth? Do you still have a mortgage? How much are you contributing to charity? What are your health insurance needs going to be if you retire before the age of 65 when Medicare kicks in, because your modified adjusted gross income total can greatly affect your cost of retirement health insurance if you're going to be going on the exchange or a state-funded type of the exchange, also known as Affordable Care Act or ACA insurance, if you're going to be needing that insurance before retirement, which many people who do not have retiree health insurance will need that. And managing your total income can play a great role in how much you pay for that. How much are you contributing to your investments? How much are you eligible at all the various retirement plans that you have available? Do you have any large anticipated expenses this year or coming up in future years? All of this information, these are just some of the high points, but all of this information we need to know to implement, again, I would say over 95% of the tax minimization strategies that we use. Well, why are so many people, when they come to see us for the first time, not executing or implementing the tax minimization strategies that are clearly available for them? Well, think about it. Many people have a CPA or a tax professional they work with. How many times has your CPA gathered information and all this data that I have included in the gap? Usually they don't. They get compensated by completing your tax return by knowing what your previous year's income was, and then pushing it into a tax program that tells you what you owe this year. They're not taking the time to ask you all of these different questions, and therefore they don't have time to figure out the tax minimization strategies where one would need this type of information to actually make the recommendation in the first place. And similarly, if you look at many financial advisors, they get compensated based on managing the investments. So the more assets they have under management, the more they get paid. And they don't get paid to do all these different things. But in my opinion, there is no way that you can effectively manage investments if you're not making sure that people are getting all the tax minimization advice that they can. And you need to constantly, every year, your financial advisor should be doing this all this for you. How do you know if you're getting this value? Well, at a minimum, your financial advisor should be reviewing and updating these things annually. Your net worth, your current income streams. What do you expect for future income streams? They should be looking at your tax returns or asking for your tax returns every year to be able to do an analysis if they need to. Do you have large anticipated expenses coming down the pipeline? What are you doing for health insurance and retirement? What does your estate plan look like? There's many tax planning benefits that can be gained by knowing what your estate intentions are for the future. And how much are you giving to charity on an annual basis? And again, if you're not having these conversations at least once a year with your financial advisor, there's no way that they can make the recommendations for minimizing taxes based on that information that is needed to collect to avoid the gap that I just mentioned. So hopefully this made sense to you today. Once again, my name is Ty Bernicke. If you have any questions, you can call one of our certified financial planners, or you can schedule a quick call by simply clicking on the link in the description, or you can visit our website at bernicke.com. Thank you.